Hey, good morning, and welcome out to Morning Markets with Rob. Obviously, I am Tony filling in once again, so I appreciate the opportunity to come out and have a little bit of fun for just a few minutes. But it's brought to you by Wealth Builders HQ, obviously. And let me get the disclaimer out of the way first. I am not a registered broker, dealer, investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading. So let's jump right to it. And where did my charts go? There we go. And actually, let's jump into where the futures go. I have them here somewhere. There we go. Let me pull those over here for you real quick. See what the futures are all doing. We get the S&P in the upper left-hand corner. It is bright and early, a little bit after 5 a.m. out here on the West Coast. SP futures are up. You can see here 29 points, so a pretty solid amount at this point. This is the Dow, the YM, which is up 197 points. The NASDAQ, the NQ, is up 132. The Russell's down here in the left corner. That's up almost 14. And then I've got gold and oil I watched as well. Gold's up 330, which it doesn't really matter that much. But oil's down a little bit. It's down a few pennies. So if you're trading oil stocks, they may head down today. It's hard to say, right? I mean, it's sector specific, obviously, for oil. Typically, when oil goes lower, the oil stocks do. Not always, but for the most part, they are pretty well correlated. So, I'm hoping oil does go down because I've got some oil positions. But anyway, so I have got, I'm still fighting this little bit of a cough here. Keep some coffee out, that'll help. So I've got a few candidates here that some may pop in the next day or two, but some of these may take another week or two to play out. My overall opinion right now in the market is that we're probably going to go sideways for a while. I think we're going to have, some moves up, some move down, just like yesterday, where we were down yesterday, and today it looks like we're going to pop up a little bit. The day before we were up a little bit. So I'm expecting the next few weeks or the next few months to be mostly sideways. I think we're in a big consolidation phase. The bulls and bears are fighting back and forth. Some people are bullish. The charts are starting to look like they have some bullishness to it. But I don't think, at least the macro picture, unless that changes and turns over, I think in the longer term, I think we're going to head lower. But even in the bigger picture, with the macro picture, the way it looks, we're still going to have periods where things improve a little bit and then the market reacts and goes up based on that information. But if what is going on behind the scenes, all that big picture data, it is, if that starts to come out and be seen and news starts to change things like that, then I think we're going to take another big leg to the downside. But that's just my opinion. That's my analysis. That's what I think from looking at everything. So I'm not too excited about the upside in the long term. In the short term, yes, because there's a lot of really good looking patterns out there right now. Here's a nice ascending triangle on Agilent. Right, I pulled all these. I went through the entire S&P last night looking for some patterns to see what was out there, what was available. Some of these, a couple of them are very liquid. There's a couple of them that we looked at last night in the patterns and flash class that I do once a month. And the options can be a little thin, so make sure you're looking at open interest, double check that. But a nice, beautiful ascending triangle on Agilent. We've already got a nice bullish move here in October and November, and now we've just consolidated for the last month or two. So if it breaks north of that, what's that, about 157? There's a decent shot we're going to 167. That's where the target is, at least. So make sure you use stops. If you don't know me, I do a 3-to-1. This is the 3-to-1 risk reward ratio. So if I get in at 158.74 and I get stopped out at 156, basically, there's 3 times as much upside as there is risk. So this distance is 3 times exactly. So that's why you see the numbers the way they do. The only thing I do when I create my plan, I say, okay, where's the stop at? Well, here's resistance. If it breaks above there and then falls back below it, I'm going to get out right here. And then the target is right up here on the measure move, which is based off the pattern. So I put the target up there, and then it's just simple math from there. Excuse me. It's American Airlines. A lot of the airlines have had a bull or a flag or a pennant type of pattern. They had a big old pop there in late December, early January, and on the news that people are starting to travel again a lot, apparently. And so flags and pennants typically don't create reversals. So I would expect if this market does take a move to the upside, which is possible, then the airlines possibly could have a nice big run. So you can see there. And usually when there's a big opening here, a big target, this is only a $17 stock, right? So if the options aren't that liquid, you could just trade the stock itself. But this 1774 is huge from, it's a huge entry point from where the risk is because there's such a huge potential for profit, right? We're going all the way up to about 20, which is, 3 points. 3 points on a $17 stock is almost 20%. That's huge. So the little dashed dot entry point, the orange entry point, that's what I call my toe dipping entry point, where I like to scale in. I'll pick up 1, maybe 2 contracts, maybe 3, depending on the size of the stock. This one, might be 5 or 10, depending on what the ultimate size is going to be. Usually I talk in terms of 10 contracts. So if I was doing 10 contracts in this, I'd do maybe 2 or 3 contracts at the 1729. That way, if it does turn over and stop me out, then I don't have a lot of risk. But if it continues to run, then I add to it at the 1774, and that way I'm a little bit ahead of it, right? I've already got some profit in the bank with those 1 or 2 or 3 contracts. So it's just one way I do to manage my emotions. Just a little trick I've learned years ago called scaling, right? Whether you're scaling in or scaling out. Here's another one, same concept. Aptiv. I'm not sure how you pronounce it, but they're in automobile parts. Another one, inverted head and shoulders. There's lots of these right now. Lots of inverted head and shoulders. And this is just one more. I think there's at least 1 or 2 more here. And a lot of them have broken out of the neckline. The only thing that concerns me with these is they've had a big run already. So I would prefer to see a little bit more consolidation before it takes off, because runs like this typically don't just continue forever, even though we like to believe that, right? So I'd like to see it consolidate a little bit more, but just because it doesn't mean I'm going to stay out of the trade. What I will do is reduce my position size, because I think the odds are higher that this thing consolidates for a little bit. I'd like to see it dance for a few days or a week or 2 and then take off. That would be ideal, but that doesn't always happen the way we want it to. So if it continues to run like this and it turns up and hits one of my entry points here, then I would just make sure I take a little bit smaller position. And considering that I'm not super bullish anyway, I'm not going to take any giant positions on the bull side anyway, because I think we could turn over at any point. And we got some selling pressure yesterday that made it look like the bears are coming back in. So again, I think it's a big fight between the bulls and the bears right now, and it may take a while before somebody wins. So here's Aptiv was an inverted head and shoulders. Here's a head and shoulders top. And one thing I noticed, that this is a water utility. There were several utilities that are in a very same pattern. And that's one of the beauties of patterns. And when you go through a lot of different charts, or if you look at a specific sector, you'll notice that a lot of times those sectors, that particular industry, they have a similar pattern. I saw 2 or 3 other utility companies that all have a head and shoulders pattern. This was just the nicest looking one. I didn't flag every one of them, but so this is the exact opposite of the inverted, obviously, right? So the only thing that's a little bit unusual here is that we've got some decent volume, some pretty solid volume here on the right shoulder, which typically we would want to see less volume. But we also have heavy volume on the sell-off too. So looking for a target about 140 on that one. So I love the looks of this pattern. Whether or not it plays out remains to be seen. Just make sure, if you're not familiar with the patterns, first of all, go get patterns in Flash, because then you'll know these patterns. Make sure you wait for it to break the neckline. Right now, the pattern is just formed. It has not confirmed. The confirmation is when it breaks the neckline. If, I should say. Because right now, this neckline is support. And I can't tell you the number of times it took me to figure out the neckline is support until it breaks it. Because I used to see the pattern about, I can get in right in here, or right here where it is today. And then all of a sudden it comes down and hits and bounces and stops me out. It's like, So, wait for confirmation. Unless you want to be super aggressive. Boeing, this is a little flag pattern. It's been kind of dancing around here for a couple weeks now. Been watching it, keeping an eye on it. I've got the plan in place, just waiting for it. And you can set alerts if you want to. If you think that it's time, then maybe put an order, contingent order out that says, hey, at 216.38, go buy me an option or go buy the stock, whatever you want to do. Excuse me, sorry. So totally up to you on that, but Boeing is looking pretty decent, especially if this market has another pop, which I kind of think we will. But one little pop doesn't change my larger analysis, which in the next several weeks or several months, we're probably just going to be sideways. Citigroup, another inverted head and shoulders. Again, another one. This is the kind of consolidation I want to see. So I kind of like this. I'm starting to like it. We had a big run, and they typically don't just run. You can see here a big pop there, and then it consolidates a little bit, and then it has a little tiny pop before it rolls back over. They just don't they usually don't just keep on running, right? There's a little rest period. And I know this is a cheesy analogy, and many of you have probably heard this, but if this was me sprinting up a hill, and if I sprinted up that steep of a hill that quickly, I'm going to have to catch my breath, right? I just can't keep going. So there is Citigroup, and then Clorox. This is one I haven't seen for a long time. Another inverted head and shoulders. This is actually a little bit nicer one. But there is some potential, some pretty solid potential. 152 to 163. Well, I put 163 as a target. The actual pattern itself, the target is about 175. So this one could go even further. It's entirely possible. So basing it off the pattern. But I put this here. This is where I would scale out, right? If I get into a position here, if it holds this line and takes off to the upside, then if it gets up here and it's running with a lot of momentum, a lot of volume, then I only take out part of my position. I don't take the whole thing out. I'll let it keep going. I'll put a stop on the other part. Say if I had 10 contracts, just an example, right? If I had 10 contracts and it runs up here to the target and there's lots of volume, lots of momentum, then I might only take 2 or 3 out, maybe 4 or 5, depending on what the action looks like. And then put a stop on the other half somewhere down below where it's at, right? You use the chart, you go, okay, what does the action look like? If it runs up here with light volume, and there's not a lot of momentum, there's a lot of excitement about it, then I might take out 5 or 6 or 7, and then put a tight stop on the other part, right? It's one way. Scaling is one way to control fear. It's a way to manage your fear. Okay, I'm at the target. What do I want to do? You don't want to leave it all there, because if it takes off to the downside, then you give up all your profit, right? But you also don't want to cut off the upside. So if you take out part of the position based on what the stock is doing at the time, then you bank some profit, you reduce your risk, and you still leave the upside open. It really is beautiful. If you haven't done it, try it. It'll blow your mind how much it will help you manage your mind, how much it will help you manage that fear thing. And in another inverted head and shoulders, this is Charles Rivers Laboratory. This is a pharma biotech, so be careful. These things can be super volatile. And again, double check the open interest if you're trading options on this, which, $300 stock, $250 stock, probably will be. But some of these I know we discovered last night, are not super liquid. So just be a little more cautious with options trades on it. And obviously they're higher dollar. But this is a beautiful pattern. Beautiful inverted head and shoulders. Looking forward to run up to possibly 300. And last but not least, and then I'll shut up because I've been rambling for quite some time now, Digital Realty. Another ascending triangle. So, and it's broken out already. It's already confirmed the pattern. And now we're back to the old resistance, which should act as support. That's what we're looking for. I like the looks of this right now. In fact, let me zoom in here. We had not only did we break out of that resistance level and confirm the pattern, but we did it with a lot of volume, a lot of momentum. Okay, this big volume spike is a good thing. That's exactly what you want to see. And we ran hard for 3 days with significant volume, and then we've pulled back the last 4 days back to this old resistance, and the volume got super light. That right there is the other thing that I should have warned you, because earnings is on some of these. It says it's the 16th. Confirm that date. Not sure if that's exactly when it is. Just make sure you know exactly when earnings is coming, but it is next week. So that definitely puts a little damper on the opportunity to possibly trade this thing. So beware of earnings. Make sure you're checking liquidity on some of these, because I know some of them are a little bit thin. And just cover your backside. That's all. Make sure you use your stops. Take your plan, create your plan, and stick to your plan. That's the most important part in trading. So, hopefully you've had fun. I know I have. I always do. Y'all take care. We'll see you soon. God bless. Bye-bye.